Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Jill Malandrino with the Streets Options Profits, and together we bring you the Morning Call Express. So the S&P failed at a key resistance level at 1220 yesterday, but after several days of some nice movement, did we take a rest here?
I'd like to take a rest here, and I think traders and all market participants that have been so on edge on whether or not they could get involved or whether they're missing this rally, they were definitely happy that we rested there, and I do think it's normal, and I do think it's constructive. Now the question is, what type of pullback do we have? What type of commitment do we have to this recent 12% move off the lows? So lately, the retracement's been very shallow. There hasn't really been much. There hasn't been much of a pullback at all. So let's see what yesterday's intraday high leads to. So I want to show you a quick chart of the S&P. So if you take a look here, you will see, this is the move from the low. This is when we did that reversal that Tuesday, and it's been really sharp, really fast. And you know what, failing in front of this key resistance makes sense. I wouldn't even say failing, I would say pausing. So what I would like to do is I'll show you a nice little key feature here, the Fibonacci retracements that I use to help show me commitment to a move, which look how fancy that is, where you could actually see it. You move over. Typically, if you see a 25% retracement from the lows to the highs, and it holds there, that's really strong. That stands at around 1183. That means we're in the same type of path we've been in since the start of this. If we get a little bit more of a pullback, I think this 1164, which coordinates to this last breaking of this downtrend, this would be an unbelievable spot to buy the market. This would be a spot that I would say needs to hold in order to keep upside momentum at this pace.
Okay, so 1164 is a key support level. That would be a great spot for people to get involved in. Moving on into the sectors, we're going to check the temperature of key sectors, ones that have been performing well and ones that have taken advantage of the weakness.
Yeah, well, the Qs, which is tech, that's been showing them at best relative strength. Stocks like Apple went back above 400. Amazon went back to highs. Mega cap tech actually had some follow through. The retail sector itself, the RTH is unbelievable as well. Some stocks making new highs like DEC, Raw Stores, Under Armour acting okay, Lulu, Walmart. Remember we talked about Walmart? I was like, look at this chart of Walmart I have to show you, because we said look at Walmart breaking this downtrend. This means something. This is why we love to trade against downtrends being broken. And if you bought here around 53, you had a nice percentage move in Walmart, one of the toughest stocks in the world to get any kind of gains. So it just shows you, if you're a stock picker and you're looking to get involved in the market, there's a lot of spots, from the lows into the highs that you can make money with, but you have to know how to do it.
And there's also spots moving to the downside as well because the OIH has failed to participate.
Well, they participated off the lows and they came into some key resistance yesterday.
Which they missed.
Exactly. I sent out that note to maybe short a little OAHs and even some of the AGs, the MOO, just for a Q trade. I don't think I'm going to get much out of it, but I did short this area. If you look, it made sense. You had a really nice move off the low into key resistance. So to me, I'd rather be short going into this key resistance versus long. And I look for a little move back down. Nothing great. Same thing with the MOO. Short a little bit. Look at the size of this move from 40 to 48 into a key moving average. I do think I could make some money perhaps down to this 46, but I'd rather buy a dip. But since I'm so active, I could actually short into overbought resistance.
Okay, great. So moving into the trenches today, we're going to obviously talk about earnings as Alcoa kicked off big this week, and we have a lot of big news coming out today. JP Morgan reported, I think it's about 50 cents down in the pre-market last time we took a look.
Yeah, well, Alcoa came out and everyone said it was a disappointment. At some point yesterday, they even took it almost positive. So that was a non-event. Today, JP Morgan down 50 cents. The banks just had a big move. And you're better off always buying the banks on dips, because if you pay up for them and you look for momentum, it doesn't happen. For JP Morgan, I'm not sure, I haven't read all the notes because I'm in here. But as long as it stays above this 31.50, I think JP Morgan's fine. It just came from 28 to almost 33. That's a big move. So I'd like to see it hold right around here. And that's perhaps where I'll be looking to buy some back.
Okay, so we'll be looking at some big names for earnings: Google, Apple, JP Morgan, and a few of the other banks with the earnings calls this afternoon. And then also some high-end retail when we get into quick hits for the longer version of the morning call.
Yes, so tune in then, and we'll get into the details a little bit later. Have a nice morning.
Thank you.
Was that less than 6 minutes?